Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we did see a slightly mixed day as the major indexes continue to approach some key levels, Justin.
Yeah, so we'll definitely get into that, and we'll also talk about a few of the stocks that looked interesting, including Antero Resources, Costco, which we talked about last week, and also Insulet in the diabetes play.
So we will update you on those charts, but first let's take a look at the major indexes. The Nasdaq today down some 0.2%, but still holding above that 13,000 level. We had the S&P 500 up 0.2% today. In the lead, we had the Dow up 0.7%. Also, the Russell 2000 roughly flat for the day, just edging lower. So taking a look at an intraday chart here is a little bit of a choppy day, but we did close off lows.
Yeah, and that was especially apparent in the NASDAQ composite. We were down like pretty significantly, over 1% at the lows. So well off the lows, basically in the like above the 60% range for both the NASDAQ and the S&P 500. So this is just showing a market that's very resilient and doesn't want to give up ground, and this has been a really strong move off of the bottom, and a lot of people are certainly bringing up a fear that this could just be a bear market rally. But right now, there has been a little bit of a shift in how the indexes are handling news. So that's a positive. But look, we have that 200-day line looming for the NASDAQ composite. For the S&P 500, it actually hit its head on that 200-day line today. And while, again, it closed off of its lows from earlier in the session, it kind of closed mid-range, it's still in the 60% range, roughly, but that 200-day line is kind of a line in the sand for the S&P 500, whereas the Dow Jones Industrial Average and the Russell 2000 have both cleared their 200-day lines.
And now I guess the question becomes, Justin, can they stay above that level? And
right.
One thing that I was talking about with Harold on our most recent Barron's Live episode on that question of, is this just a bear market rally? I think how the major indexes act around this 200-day line, if we can get the NASDAQ and S&P to join the Russell and Dow above that level, that might start to shift the thinking there on, is this a bear market rally or something that can be a little bit more sustainable? What do you think?
It remains to be seen. I mean, I think it could go either way. And that's partially because, look, I remember the 2000 to 2003 bear market. And I remember getting sucked into some of those bear market rallies, which can be super powerful. We keep on referring to some of these rallies, like in 2001, after the 9/11 tragedy, there was a 40% rally in the NASDAQ composite. But that didn't stop it from going down to new lows and eventually having a 79% correction in that time period. So it really remains to be seen. It's hard to believe that with all of the Fed tightening that could be coming and a potential recession, that the market could just shrug it all off. But I've seen stranger things.
Yeah. Exactly. And you have seen Stranger Things, the show, because we briefly talked about that. But for now, the market is running up that hill, climbing that wall of worry. So with that being said, even if it does ultimately turn out to be a bear market rally, and I know you are so great about modeling all of those potential scenarios and being open to any scenario. So what does one do with that? It seems like we can't just assume it's going to be a bear market rally. There's no way with what's going on with the Fed. We're definitely headed lower. We can't just assume one scenario is going to happen. We have to be open-minded. So it seems like in terms of an exposure standpoint, you got to be involved, but we're not going pedal to the metal.
Right. And it really comes down to, look, you can be aggressive if you want, as long as you also are keeping a very strong eye toward risk management. Yeah, exactly. So, it really all comes down to that risk management component. And once you have profits, making that decision, okay, am I going to be taking profits as I get them, or am I going to try and hold on to something for a little bit longer if this truly is kind of the rally that works, the one that lives? But you still have to have your lines in the sand, and whether that be moving averages or support levels. I mean, right now for the Nasdaq Composite, we've been talking about how for the Dow Jones and the Russell 2000, we want to see them stay above their 200-day line. For the Nasdaq, I think that level could be right around this 13,000. We climbed up above that, and we've got a lot of room now above that 13,320 level that we were talking about for so long. Now that we've gotten some room there, for me at least, I don't want to see the stocks, the market come all the way back down there without me taking some exposure off. So, I might be a little bit quicker to take exposure off at either the 10-day or the 21-day line. So, there's a lot of different areas that you can look at. You don't have to wait for the market to get all the way back to the lows to say, oh, this could be something that's not working. There's a lot of things you can do before that, and it can be incremental. You don't have to do it all at once.
Absolutely. So well said, Justin. A great discussion there, providing some clarity for our viewers. Let's take a look at the XRT ETF in the retail sector. Walmart up big today on its earnings report, and XRT here up over 4%.
Yeah, I mean, so you had Walmart and Home Depot, which both beat views and both were, looking very strong. So XRT, which is a retail ETF, was certainly showing that strength in both of those stocks. But remember, it was Walmart last quarter, last quarter, that was kind of pushing a lot of things down when, both it and Target were talking about the problems that they were having with oversupply and not moving their inventory. So it's certainly a shift that they were able to kind of beat those views. But a lot of people kind of wonder, hey, did a lot of companies get a little smart and tamper down those expectations? So a lot of these beaten views, is it really just because expectations were lowered and they kind of lowered the bar on themselves? But that being said, there's still signs of life here, and it's really important to kind of recognize that there was a strong move here. And while XRT, the retail ETF, is still below its 200-day line, it has shown a lot of strength, and we are seeing a lot of the industry groups in the retail sector also moving up from the low part of the 197 groups to the higher ranks. And just as a reminder, U.S. retail sales numbers are going to be out tomorrow at 8:30 a.m. Eastern. So that'll be another number that's important to watch.
And we will be taking a look at a retail name shortly, but a couple of other things to go over first, and that is oil and natural gas. Oil here down over 2% today. USO, rough proxy for that. So we can see that the trend is still lower here over the last couple of months, but UNG on
different story.
Yes,
exactly.
Different story.
So when we talk about the oil and gas sector, and certainly oil and gas names have had a resurgence. Look, they had a pretty ugly June, but this is an area that is, has seen a resurgence. You have the XLE, which is the Energy Sector Spider ETF. But you just have to recognize, if you're going to be playing the energy space, and look, solar's in there too. What is it that you own? And so we'll certainly get into that a little bit more. But this is just something where there's a big difference between the oil and the gas plays right now. So it's important that as you're looking at these stocks, you understand what it is that you have.
Yeah, and if they are tied to a commodity, look at what that underlying commodity is doing.
Yeah.
All right. Well, speaking of, let's take a look at Antero Resources. It did finish off of its highs for the day, but still up 4%, Justin. Volume of about average, but its highest in a couple of weeks here, it looks like to me, getting above that round number at 40. We got earnings out of the way, but a lot of peers here, Antero and a number of others in the group, kind of looks like this today.
Yeah, and again, you've got a commodity play here, right? So it's gonna a lot of times look like what's happening with the underlying commodity, and these haven't been easy. I mean, I thought that this was looking really strong last week. In fact, last week on Stock Market Today, we covered Range Resources, ticker symbol RRC, and that was something that we had put on Swing Trader. But yesterday's action was pretty tough, a move all the way down to the 21-day line. If you were doing it as a position trade, something that you could maybe hold through. As a swing trade, a little bit tougher as you go below that
Yeah.
10-week moving average line and 10-day moving average line and 5-day moving average line. And look, it's never great when you see a stock kind of break out, but then kind of fizzle. And volume is something that's been missing in a lot of these. But there are a number of setups in this area. We've been kind of watching these, and you just have to kind of be careful, right? Because sometimes if you're buying at the beginning of the day, by the end of the day, you can kind of get a little bit of a regret there as it fades. But that doesn't necessarily mean it's broken. So I still think that this is an area to watch.
Yes, absolutely. We will do that. Okay. And Costco, another one we've been keeping a close eye on, arguably yesterday, a day you could have snuck in to initiate a position. The stock following through today with a breakout over a cup with handle base, clearing this 553 area roughly, closing off of the highs for the day as well, but still up 1.3%. We did get above average volume, the highest volume here in a number of weeks for Costco, tightening up. So not only some compelling price action here that warranted it being added to both swing trader and leaderboard, right? But the story here with the economy, and even though it looks like inflation may have peaked, consumers still feeling pressure in their wallets, and so maybe looking to retailers like Costco to get their goods.
Mm-hmm. And I mean, I've got to tell you, I mean, just food by itself. I mean, that's something where a lot of consumers are feeling the pressure in their grocery bills, and certainly where we do a lot of our shopping for
Yeah.
groceries is at Costco.
Mm-hmm.
So why not buy it yesterday? I think technically you look at the price action, and yesterday was arguably a stronger day, but it did lack that volume. That was what
Mm-hmm.
caused us to hesitate. And again, this was another one that we talked about at the Stock Market Today video last week, which just kind of goes to show that it's important that you do your homework so that you're ready for these stocks when they do potentially go over those breakouts. But we are kind of in that waiting game now. Is it something that can hold, make progress, and go up from here, or if this fails, then you just take the loss. It's one of those things where this is part of the risk management. You're going to have a lot of stocks that you may purchase and don't work, and that's just part of the process. It's okay. You have to kind of get used to it, but you have your lines in the sand, so you have your scenarios. If it goes up, this is what I'm going to do. This is where I'm going to take profits, or this is my first profit target. If I get to this level, then I'm going to change my holding, or I'm going to change my stop. I'm going to raise that up. So there's all sorts of scenarios that you want to think about ahead of time so that you're not sitting there like a deer in the headlights when something happens and you're like, I'm not quite sure what to do because I didn't think
Yeah.
about that ahead of time.
Justin, and if you think about it, doing your homework is so important. But you're like the smartest kid in the class that we're trying to copy the notes off of. You're helping us out here, holding our hand through the homework
Well, and
by coming up with these ideas to analyze.
but let me be honest with you. Okay, so I felt like I was the one that was able to copy off the smartest kid in the class because I got to work with Bill O'Neill for so many years.
Yeah, you did.
But I will also say that as much as I could see, when he was buying something and I could
Yes,
watch
this is
that, I could see
important.
that happen in real time. Man, that man did not tell me when he was
Mm-hmm.
selling. And so you have to kind of do a little bit of your own homework. It's not enough to kind of know what other people are doing
Yeah.
because you don't know when they're selling. So it's important that you kind of get your own risk management principles in place, what you can handle yourself, because I might be able to handle a little bit more volatility, or maybe I can't. Maybe I sell much quicker and you're more of a long-term investor.
Yeah.
So you have to kind of go with what your personality is.
Mm-hmm.
So cheating off the smartest kid in the class isn't necessarily going to get you the good grade.
Okay, better analogy. This is like the TA study hours.
Okay, very good.
Where
Yeah.
we go to the classes, we get the hours in, but then we also go to that study hall, make sure that we're brushing up our knowledge and that we're really preparing for the exam.
At the end of the
So,
day, there's no easy way to do it. It's one of
yeah.
those things where you have to put in the work.
You do. But hey, this show, like you said, we're pointing out some things at least to be aware of. So
Yeah,
good stuff
absolutely.
there. Okay, let's take a look at Pod. This is Insulet in the medical products group, a diabetes play, as you mentioned, Justin, working on a pretty big double bottom here all year long. Goes way back. But what do you think about where it's trading now? It does seem like it has turned a corner here. This is a pretty deep base, but it has come well off lows, and it looks like it's working on a couple of tight weeks.
Well, if you look at that weekly chart and you recognize that this had such a strong move from, in that 2019 from 100 all the way up to, 300. And again, it's got a new product. And in fact, they keep on improving their offerings. So now they've got the Omnipod 5, which they're talking about a lot in this most recent quarter. Basically, it's a wearable pump, insulin pump, so the patients can be having their glucose monitored, often by something from Dexcom, and the pump is automatically adjusting the insulin that needs to be counteracting those glucose levels. So this is something that could be huge for a lot of
Yeah.
people that suffer from diabetes, and just giving them, a lot of different ways to kind of live a more carefree life when you're not having to
Mm-hmm.
deal with pinpricks and constant calculations of how much insulin you need to give yourself and everything. So this is something that could be a game changer for those folks. And whenever there's something in the medical space, I always look to Allison Gatlin, who is our reporter that covers that area, because she really does break down the stuff really well. This was our stock of the day, so I highly recommend people take a look at that. And it's good to kind of just get a sense of what's going on in some of these areas that, most of us know people that are suffering from diabetes. And so
Yeah.
how are they treating it, and what new things are out there? Because the treatments are just phenomenal for all sorts of different diseases. On the technical side, look, we've got a strong move up from the bottom here on that right-hand side. And we have had a little bit of a break here, right? We're kind of pausing right before that buy point, and I do like to see that. So
Mm-hmm.
now it's a matter of, where do we go from here? Are we going to, just kind of handle out and pause, or at what point do we move through that 280.46 buy point? And the way we get to that is by taking the middle of the W, adding 10 cents, and that's one of the things that we use to kind of say, okay, now it's kind of breaking through a resistance level. We also have a new CEO for this company, so there's a lot of new happening here. Now it's a matter of, can this be one of those stocks that does come back to lead again? And
Yeah.
a lot of times we were looking at Dexcom as well, because it's certainly in the space, and this partnership seems like something that's benefiting both of them.
Mm-hmm. Absolutely. All right. Well, thank you so much for that, Justin. And thanks to everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So please join us, investors.com/IBD Live, for all the details on our daily morning live stream, where we are talking about potentially actionable trade ideas in real time for the first 90 minutes of trade, and interacting with you, our lovely audience, talking about tickers that you care about, our take on overall market conditions, portfolio management strategies, and so much more. So we'll see you in the morning at 9:20 a.m. Eastern. And we will see you right back here tomorrow after the close.